One thing that came across, and we're not going to go too much longer, folks. One thing that came across is someone said that Michael Burry's top position is in Lumen Technology. Have you heard of Lumen?
I think we did Lumen once, didn't we?
Well, it sounds familiar, and boy, is it down, Paul. This is an incredible company. I mean, CenturyLink, basically. CenturyLink, Lumen Technologies, the ticker symbol is LUMN. LUMN. It's an American telecommunications company in Louisiana. And let's see. Let's see. Subsidiaries are Level 3 Communications, Quest Corporation, so on and so forth. Look at the stock price, Paul. It was way up 10 years ago, 12 years ago, way up. I mean, way up. It was upwards of 40 some odd, 45, 48, $50. It's now at 13, Paul. This is for Lumen Technologies. You want to look at this company? What do you think?
Let's do it.
Erase all that nonsense before you get cooking. What is the market cap for Lumen, baby?
Lumen looks like it's a $14 billion company. No PE because they don't make money, so negative profit margin, X and X. Another reason I want to get rid of the profit margin as a metric, because if there's no PE, it's automatically an X. But they pay a dividend of $1 billion. So let's look at the free cash flow. A high dividend yield of 7.6%.
Good Lord, 7.6.
I mean, immediately I'm like, wow, Michael Burry owns a stock. It shows how much I don't know.
Okay, how about pillar number 3, which is revenue growth over the past 5 years?
17.5 to 20.7, check mark. But if you see, there was a big jump from 17 to 18 and then a steady decline. So who knows?
Profit growth over the past 5 years?
Oy vey. 626 to a loss of 1.23. X there. Now, I will say, over the last 3 years, Seth, look at this. Other income and expenses. Negative 2.7, negative 6.5, negative 2.68. They probably had big write-offs here. Understand what those write-offs are for, guys, because that might be what Michael Burry likes about the company, that they've had big write-offs, and those write-offs aren't going to affect the business, and the cash flow is good, potentially.
Owen's saying he thinks that you had options on this company. Is that correct?
I don't remember. Maybe I did.
The people are saying, yeah, he did. Okay, let's go. Pillar number 5 is shares outstanding. We want this going down. 540
million down to up to 1.08 billion. That's doubling. Do they have a stock split and that's what I'm missing here? No. They had a big jump. It's literally doubled and doubled.
Whenever we go over a Burry stock, it's just mind-boggling what's going on. But this one is really strange, Paul.
Yeah, that's what he does. He does very thorough analysis, and he's able to go sift through the crap and go, hey, well, look what I found.
Pillar number 6 is assets over liabilities.
3.1 billion versus 6.6 billion. Ooh, that sucks.
Bad underneath?
Oh, that's bad.
Okay, all X's except revenue growth.
Now cash flow, baby.
Go ahead.
Cash flow. 1.6 billion to 2.8 billion. Check mark there with an average of 2.4.
2.4 bill.
Times 20.
Yes.
Equals $48 billion.
Oh my God. The current market cap is $14 billion.
So what's 14 divided by 2.4? 6? Not even.
2.4, yeah. It's a 5.8, Paul.
All right, guys. Here's your kicker. That's incredible. And the last year was 2.8 billion of that. 2.8 billion instead of 2.4. So guys, this is where the play is. If you think the company's sticking around, if you think those write-offs are temporary, if you think the business is going to go back to normal, revenue is down a lot, but it's only selling for 5.8 times free cash over the last 5 years.
Revenue is up, Paul. I'm sorry.
Oh, sorry. But the revenue is declining over the last 3 years, if you remember.
Okay, keep going.
Look at the revenue in the last 3 years. Remember this. 23 down to 20. So it's even though it's up, it's still a decline over the last 3 years.
Okay, well,
now,
you know everything.
If they sold stuff here, like they had the write-offs they had, maybe they sold divisions off for a loss. And that could be the explanation why. This is why 8 Pillars is so great. It tells you the story and tells you what questions to ask now. They had 3 major write-offs in the last 3 years. They had declining revenue in the last 3 years. That tells me, okay, maybe they sold some assets, some businesses that they had to sell for underneath where they were on the books for, and that accounts for the write-offs. And that accounts for the revenue loss as well. This could be a good deal.
Michael Burry got in at $10. People are saying that's a nice time to get in. Paul, they did have that ridiculous dividend of 7.6%, paying out $1 billion of their 2.4 in free cash. Are you worried about that huge dividend?
No, I'm not.
You're loving it.
They have 2.8 last year, 3 billion. Guys, somebody find out if they sold assets, if they sold companies off, if that was part of the That was part of the issue they had.
John, the website you're looking at is our software, the everythingmoney.com software. You can get this software if you're a Patreon. Our patron members have been frothing at the mouth for the software for a long time. They finally got it this month, and they're tickled. They're tickled. I was going to use a profanity there, which I really love doing in my real life, but they're tickled to have that software, and you can too as a patron. Of course, Paul, you know, it just hit me on the way in that we're like 18,000 something subscribers away from giving away that Tesla. And oh, what a day that's going to be. One of our patrons, if you're in the Patreon group, you're automatically entered. And if you're in there for a long time, you get more entries to win the Tesla. If you're here in America, we will get you in here. We'll go pick out the dang car ourselves, pick out the color. We'll make it a whole day. You'll be on the show. It'll be incredible. So yes, Lumen Technologies, Paul, look at that. Look at that. So you had a desired market cap of 48 bill, current market cap of 14.
Well, I had a desired based on our 20 times free cash flow.
Yeah, of course.
And it's currently selling for 5.8 times the last 5 years free cash flow. And of which, on that 5 years free cash flow, if you look, they had pretty low numbers the first 2 years. 1.6 and 772. I mean, I get this. What's 14 divided by 2.8?
5.
It's selling for 5 times last year's free cash flow. I mean, guys, this is what I say. Like, even crappy numbers at 5 times free cash flow, the story's good, and they sold off divisions or something like that, it might make sense.
Thanks so much for watching the video. We hope you were intrigued. If this style of investing speaks to you, click the link below to join our Patreon. As a patron, you get access to a wonderful community of like-minded investors where you can chat, connect, ask questions, and share ideas with badasses like you all over the world. The best part is you get the amazing Everything Money software. This is revolutionary, unlike any YouTube page. You can track your investments, look at stocks, and quickly run our 8-pillar analysis on any company you like. The top tier patrons get direct access to Paul and Trader Mo. You'll see their daily trades, their updated portfolios, and every options contract they write on a daily basis. We provide Patreon exclusive videos just for you, including live streams and exclusive content from our team. Our bottom patron tiers fill fast, so join today. But hey, if you don't believe me, look at all of our patrons' amazing success stories. In comparison to other financial platforms, our software is by far the best value. This is your chance to get serious about investing. If you're finally ready to level up your investing game, join our Patreon and let's start kicking ass together.